Good evening, everybody. I'd like to invite you to this Yes Orkney meeting, which is dealing with the currency issue, which of course was of significant importance during Indy Ref 1 and will no doubt be a major issue this time as well. What we're going to do, we're going to hear from our two speakers, Andy Anderson here and Mike Fenwick, and then we'll open it up for questions. We're also filming it, so that it will be available on our website too. First of all, I'll introduce you to Andy. Andy was born in Glasgow in what probably we would now term as a slum. He worked in England, he's been a miner, he's been a trade union representative, he's lived on Skye and was involved in the Skye campaign over the bridge tolls, people who remember that, and actually went to prison for non-payment of fines, of which he's told me he had many. But he's written these two books on currency and finance, which are available here tonight as well. So without more ado, I'm going to ask you to welcome Andy and we can hear from him. Andy Anderson.
Thank you, Fiona. Is this working all right? First of all, I have to say that we got a really excellent welcome from your chairman, who met us at the boat and took us around and showed us something of this beautiful island, which neither myself nor Mike had visited before. So we're absolutely delighted with the welcome that we got. Now, what I'm going to talk about tonight, I can't possibly deal in any detail with currency and economics tonight at a meeting like this. But one of the things I want to do is to come back and deal with small groups of people who are interested in this subject on small sessions where we can go into it in a bit more depth. And I'd like to do that. So if people are interested, we can get in touch with Fiona afterwards, and then we can tie up if something is likely to happen, and we can tie up what arrangements I would make to come and do that. So that's one of the reasons why I wanted to come and talk to you tonight. Now, this issue is not only an important issue. In my view, it was the important issue of the campaign, and the one that we failed. We in the, when I would say we, I mean we in the yes side failed to deal with adequately. Now this time we've got to put that right. We've got to get it right. Now, I wrote this book with Ronnie Morrison. I met Ronnie in 2012, or sometime around there, at one of the Yes meetings in Helensburgh, where Ronnie lives. And Ronnie gave me this pamphlet that he'd been writing on finance, and asked me to have a look at it. And you know what happens? You stick it in your pocket. I'll look at it later. And talked to Ronnie a wee bit that night. Left and then looked at the pamphlet after I'd gone away. And when I read it, I thought, well, that's interesting. This guy, I've got a lot of sympathy with the argument that this guy's putting. So it was from doing that, and getting in touch with Ronnie, and going through the issues that he was looking at, and I said to him, look, we've got to tie that with the economic situation, because you can't talk about finance and currency without talking about the economy. The two go together. The two have to be tied together, and you have to look at it in the whole. And so we had a discussion about that, had a few arguments, as I indicated to Mike earlier, that Ronnie and I both strong views, and when you have got, then you have differences of opinion, but we had basically the same approach. And so we went into it and we sorted it out, and we wrote that book. That book's in two parts. It deals first of all with the economic situation, and then deals with the financial situation. And that's because it was written that way. I started off doing the one part, and he did the other. But we checked each other's writing in detail to make sure it fitted with the argument in both sides of the book. So that's this book. Moving on. Not perhaps a very good title, because most people don't realize that it's about the currency or anything, you know. Perhaps it's a bad title. But what it is a very good reference book to the arguments that we were putting forward. It is very clear and straightforward. However, what it didn't do is that it didn't make very much impression. After we wrote that, I started to go around different groups talking about the issues, and that was before the referendum in 2014. It was published in February 2014, so we had a bit of time before the referendum. But quite frankly, at that time, nobody wanted to talk about currency. It was not an issue. In fact, several people said to me, look, don't keep getting on about that. Don't rock the boat. We're going to win this referendum. Don't rock the boat. I thought, well, somebody else is going to rock the boat, you know, before this finishes. This cannot be hidden. It's going to explode, and it's better if we're prepared to deal with it than not. Well, we know what happened. We didn't deal with it. We didn't approach it. And at the very last point, they hammered it, and they hammered it across the board. Now, I'm going to test your memory a wee bit on this, because what happened was that newspapers, all the newspapers, purely by accident, of course, purely by accident, all the newspapers at exactly the same date came out with this thing about the pound, and you can't have a pound. And all the political leaders told us that it was a nonsense, you couldn't have the pound. Remember that? On about the third day of that campaign, and they hammered it and hammered it. It was in every news channel that was available, everywhere. They hammered it. On about the third day, David Cameron made a statement. He made a statement about the national debt. He made it once, it was widely reported, and they didn't mention it again. Now, what did he say about the national debt? He got on the media and said that whatever happened in the referendum, the responsibility for the national debt was the Westminster government's responsibility, and it was Westminster that would meet that responsibility. Right? Put another way around, the sterling is a huge national debt. It's a huge debt. Using sterling is one question, one thing. Anybody can do that at any time. Sharing in sterling, which was being discussed, sharing in sterling was taking part responsibility for that debt. And the debt was right at the centre of this. And he came out and said to us, whatever happens, we are responsible for the debt, not Scotland. Right? Interesting. And that was because the real people who run our economy, big international bankers, told him, you better make this situation clear, because they were unhappy. They were unhappy about the argument that Scotland would not be involved in the currency, would not be allowed to be involved in the currency, and therefore not allowed to be involved in the debt. And they wanted to make sure that somebody was paying the debt. And so they hammered him to make sure that he did it. And that's why that happened. So that is most people's view. And in actual fact, if you had said to people all over Scotland at the time when they were telling us you can't be part of sterling, that really means you can't have our debt, we're keeping all our debt to ourselves. You're having none of it. That's what it meant. That was the reality of it. So after the referendum, I wrote this other book on currency. And I wrote it to directly address that question. The question of, do we share in the pound or do we not share in the pound? We were against sharing in the pound. We thought it was wrong. We thought it would undermine our economy. But in the second book, I addressed the political question about what was this all about? What is the national debt? What's the relationship? And what would be the situation for Scotland? So although that book follows the other one, in the economic and financial arguments, it brings in political arguments which weren't involved in the first one. That's the main difference. It's not as substantial as the second one. It's half the price because to some extent it doesn't have the background work in it that the other one has in it. So that's the difference. Now, just to finish, what I started with is to say I want to do some sessions with people who are interested in this subject. I've been doing this all over the place. Small groups. I started wrong. I started having too big. The groups were too big and people couldn't participate to the extent that I need people to participate. So we then got the group smaller, and I found that I've got quite a lot of people in quite a lot of places who are able to discuss these issues in some depth. And that's what I want, because I want people who can go around the doors arguing this issue and arguing it with confidence and able to defend their position on that. That's what I want. And in these four sessions of an hour and a half can do that. And if you run them in a sequence, people have got time to absorb what they get at the session, go away, think about it, come back with all the arguments that will come up in their head about why that doesn't make sense or why there's something wrong with it, and iron it out, discuss it out, and deal with it that way. Done that in a number of cases. We've been very successful up to now. The first thing that we've been successful about is that very few people who attend have dropped out of the sessions. I tend to, the last couple of groups, I started with 6, 8, and 4, and everybody attended all the sessions and kept to it. So that's an indication that they were enjoying it. But more important, they've been able in the final sessions to participate in the discussion much more effectively than they were in the first session. So people are picking up things and are able to communicate. What I'm what's also here tonight is that I've got a publishing company which we set up for this sort of material. And what we're doing online is to invite people who've read the books or who've heard about them to come to comment online and ask questions and challenge. And I'm doing a wee blog every now and again. Every couple of weeks I do a blog on there asking questions like, why do we need our own currency rather than the pound? What's wrong with staying with the pound? And then some of the debates about it. Why do we need a full reserve currency, as we are arguing for, as opposed to a fractional reserve currency? What's the difference? You know, and little questions like that, and trying to explain what that difference is and how important it is. So anybody that was interested in that, they pick up one of those, look up the website. If they've got any questions that they'd like to put them in, and I'll answer them. You know, we'll look at them and answer them when we get around to them. And that gives people another opportunity to search this issue out and to get to know it. So any questions you've got tonight, I will deal with on either economics or finance, but obviously there's a whole lot that I won't be able to answer in a complete sense, but I will show you where that question lies and where we can answer it and follow it through. Thank you very much.
Thank you. And now I'm going to hand over to Mike Fenwick here. Mike is a social entrepreneur with over 50 years of experience in financial services. So kind of knows what he's talking about. So over to Mike.
I left a piece of paper on some of the seats. I get bulletins from the Bank of England. This one was dated yesterday. I took an extract from it. There's actually an appendix which contains 25 pages. And on the reverse side, you'll see the equations that can be used. Now, the reason I brought that may not be obvious. There's different levels when you start talking about currency and economics. It's a very, very high level, and you can't ignore it. But the heading to this lady's speech, which was to a very major conference, is Think Global and Act Local. I want to reverse that. I want to talk to you at a local level. I don't want to ignore the global influences because they're very, very large, but this is local. Fiona, and I echo Andy's comments about the hospitality we've had. Fiona took us to Skara Brae, and there's the hearth in the centre of the building. That's what I'm going to try and do tonight. I'm conscious that you have Orkney Storytelling Festival to come after Andrea and I leave. And round that hearth, people would have been telling stories. They wouldn't have been as Muriel was watching Emmerdale, or Fiona was listening to the Archers. They've been telling stories of the past, and that's roughly how I'm going to try and deal with this tonight. That storytelling festival, I understand, has to be tall stories, fantasies. We're coming up to Halloween, it's got to be scary. I'm going to deal with scary stories about money and currency and banking. I'm going to deal with horrendous stories and fantasies. I'm going to try and give you stories, if I can, which you, as you go round, can discuss with other people and see whether you can communicate what I'm going to try and say to you, because I'm going to try and keep it very, very simple. Fiona has a copy of that on the table. Options for a Currency Post-Brexit, written by a guy called Craig DL and issued through the Commonweal. If you haven't seen it, you can download it. It's free. Like Andy and Craig, they're dealing with very substantial substance in the way they go about things. Not complicated, but it is substantial. And Andy's never, I don't think, given me a big row for this. I'm more interested in tactics, because when you're talking about economics, Andy's reference to the fact that David Cameron had to say we are responsible at Westminster for the national debt was a reaction to the banking world, the financial world, saying we want this made crystal clear who owes us the money. That's where you get economics and politics mixed up. And you'll all know about the politics of the first referendum, what you were told, what you heard, how people reacted to it, whether they read the Daily Mail or whether they read the National. There's different levels that you have to deal with this. Now, what I'm going to try and do, thinking of Skara Brae, I'm going to look backwards first. About 900 years ago, King David said Scotland should have a national currency, and we did. It ended a barter system. I think people ran out of turnips for fish or clothing or whatever. That currency lasted for 500 years. It's a long, long, long time for a currency in Scotland. And you think back and say, well, why did it end? You can time it around the Treaty of the Union, when the Scottish currency faded out. Now, I could give you a big long story about the value of the currency when it was first issued and the value at the time of the Treaty of Union, but let's say it went down exactly the same as the pound has gone down after Brexit. So I want to start actually not 800, 900 years ago or 200 years ago. 300 years ago. I want to start 200 years ago to a court case. This is the first scary story as far as I'm concerned, and if I can get it over to you, it's something you probably acquaint other people with, because what I found doing these meetings, not a lot of people know this. It starts with a court case in 1811 between a Mr. Carr and a Mr. Carr. Now, I don't know, I honestly don't know, but you can Google it, who the Mr. Carrs were, but they were arguing over who owned money. And they went to court over that. And the court decided that basically when you put any money into a bank, when you deposit money into a bank, it ceases to become your money. It becomes the bank's money. You are, in effect, lending your money to the bank. That's 200 years ago. 1816, because that struck people as strange, they were still arguing it. So a Mr. Devanes and a Mr. Noble went to court and said, is this right? And the court said, yes, it is. It's the bank's money when you deposit it. We didn't have a Supreme Court back then, but in 1848 it went to the House of Lords. That was as high as you could go. We didn't have Supreme Courts in Europe. I'm going to read you what Lord Cottenham, one of the lords at that time, said. It runs true to this day. The money placed in the custody of a banker is, to all intents and purposes, the money of the banker to do with as he pleases. Now, I'm going to ask you quite literally, hands up who knew that. Thank you. And that is the truth of it. People don't understand that. Now, in 2009, the Office of Fair Trading took some banks to court and said that the way you're dealing with people with overdrafts and charging them money is unfair. First court hearing, the OFT won, the banks lost. Second court hearing, the OFT won, the banks lost. It eventually went to the Supreme Court. No longer House of Lords, we're now at the highest court. What the Supreme Court said was, we actually can't decide this, because under the European legislation, the OFT are not actually allowed to challenge the banks on whether it's fair or unfair. And that question still remains unanswered to this day. I did a report to the Competition and Markets Authority, who have taken over from the OFT, and I've said to them, look, we need to get an answer to this. Now, there are people going about having an argument, which are arguing about it just now. But basically what I'm trying to suggest to you is that in that Supreme Court decision, it confirmed what happened in 1811, 1835. From the very first day that Andy got his wage packet, or I get my salary, or you get a welfare benefit, or you get a pension, you put the money into the bank, it becomes the bank's money. Now, as far as I'm concerned, that's fantasy economics. It's worthy of discussion. It's worthy of thinking about, on the basis of saying, is there a way to change that? I'll come to that later in what I'm talking about. What Lord Cottenham also said is that the bank, however, or the bankers, are answerable for the fact that they now have your money as their money. And they've got to find a way of doing that. And what they do is they make a promise. You'll all recognise that. I could have brought a Bank of Scotland one or a Clydesdale Bank one. You think of that as currency. It's not currency. It's not money. It is literally a promise. That's what it says. The Royal Bank of Scotland promised to pay the bearer on demand £10 sterling or £5 sterling. This one is a £10 one. Now, has anyone ever seen £10 sterling? I.e., have they ever walked into the Royal Bank and seen them take the silver out of the safe, weigh it to £10, and when you hand that over, that's what they give you? No, they don't. If you walk into the headquarters of the Royal Bank of Scotland and say, I want you to fulfil that promise, what they'll give you is another one of those. It's a piece of paper with a promise on it. Fiona, you've seen me do this before. That's the one I want to use. That's a blow-up of the note I've just given. I'm actually telling a lie, because I'm going to tell you in a second. I got this out of the Kirkwall Royal Bank of Scotland today for a purpose. But that's a blow-up of it. There's a signature on it. That signature? Do you know who's making the promise on behalf of the Board of Directors of the Royal Bank of Scotland on that note? Now, you'll all have heard of Philip Green. Been in the news recently. Might be Sir Philip Green, might not be Sir Philip Green in the future. He was once a Sir. His knighthood was taken away because he bust the bank. If I walk into Lidl down the road, and I do want this back, Fiona, sorry, and ask, I don't know, buy some messages and walk up to the cashier and hand that over. Without thinking, the cashier will just put it in the till, give me the change I'm due. Now, that to me is just unbelievable, that we're in a situation where a piece of paper signed by a chief executive who no longer is the chief executive, on behalf of a board of directors who were all removed tout de suite. And yet we all just pass these around. It's just weird. Someone mentioned that we were having dinner about legal tender. That's not legal tender. No notes in Scotland, and that includes the Bank of England notes, are legal tender. And I don't want to make too much of that. Legal tender is to do with settling a debt. We walk into Lidl's and pay that over. We think we've settled a debt, but it's not. It's just a promise. The only items of currency in the UK, and it applies in Scotland, England, Northern Ireland, Wales, that are legal tender are coins. And you'll see me use a coin later on in this in what I'm going to say to you. That's legal tender. And what it basically means is if you owed someone £1,000 and went in with 1,000 of those to court, say, and said, I want to settle the debt there, your lordship, that's me settled the debt. No. You could walk in with 10,000 of them, you haven't settled the debt. You could walk in with 10 million of those, you haven't settled the debt, because it's not currency, it's a promissory note. To settle it, you walk in with 1,000 of those, or enough 20 pences. There actually are limits to what you can use, but basically if you walked in with 1,000 of those, that would settle the debt, as far as the courts were concerned. Let me move on. That's Mark Carney, Governor of the Bank of England. And as you'll know, what's happened recently is the Bank of England have decided to come out with a new, wipe clean, put it in your washing machine, £5 note. I can't read that without my glasses, so you just have to trust me. What it says, that says they'll pay you £10 sterling. That says we will pay you £5. Now, is that idiotic that you would walk in? We all got on the boat, we got on the train, we go down to the Bank of England and we walk in with a £5 note and say, I want you to honour that. They'll give you another one of those. That's what it says. Now that to me is like talking to 6 years old. It is stupid that we actually have a £5 note where the promise is we'll give you a £5 note. They could give you five coins. That's fair. It's all to do with promises. Anyone remember that promise? Try, if you can, and equate the two. That's people making you promises. But the people I've showed you so far. David Cameron, is he still around? Ed Miliband, anyone seen him? Nick Clegg. They all made those promises, and a lot of people believed those promises. Vote no. Please vote no and stay in the EU. If you don't believe those promises, start having doubts about those promises when we're talking about a currency for Scotland. Maybe we can do better, maybe we can change a few things. When I spoke in Rutherglen, I started with the theme, excuse me for making a mess, I started with the theme of too wee, too poor, too stupid. I want to deal with too wee. Population of Scotland, as you know, is 5 million plus. People who understand banks, banking, Panama Papers, how to get rid of a Prime Minister, how to put bankers in jail. Slightly north and west of here, Iceland. Population of Iceland is 331,000. That's Icelandic krona. It's used in Iceland every day. They don't have a problem with it. So why have we got a problem if we're 5 million of us? If 331,000 Icelanders can have it. In Iceland, it's a great place to learn about currency and the problems with banks. Isle of Man £5. Population, Isle of Man, 85,000. If you took Orkney, Shetland, Skye, all the islands of Scotland, you've got a population of around 100,000 people. How can the Isle of Man have their own currency and the islands of Scotland are somehow not thinking that way? To me it seems strange. Let's take that on to a yes position. One of the things Isle of Man do is have a central bank, they have their monetary authority. They have a statement on the Isle of Man Central Bank. See if this resonates with you in terms of Scotland just now. It says, the issue of its own currency is a positive statement of independence. That's what we're talking about. Should Scotland have its own currency because it's an independent country? It's also to do with the power of self-determination. What are the habits we've got into over the last 300 years that have stopped us thinking about these things? That's the question I have all the time, is what is it in history that taught us to accept the current status quo without questioning it, without questioning the promises we're made, without questioning the fact that we're passing our money to the bank and saying, here, do with it what you like. I could go on. That's Jersey. Even smaller population. That's a borough in London, Brixton. I'm going to let you, I'll pass, if without disturbing Martin, I'm going to walk forward. Pass those around if you would. I would like them back, please. Council in Brixton, the population of Brixton decided that they wanted to try and stimulate economic growth in Brixton, and they started their own currency. It's developed, and it's something that I think will happen in Scotland. I'm going to try and help get it started, but the traders in Brixton, if you can think of Orkney and the shops you have, etc., they can actually pay their rent and their rates to the local authority with Brixton pounds. The local authority say to its employees, if you want paid part of your salary in Brixton pounds, we'll quite happily pay you. There's two technical terms I'm going to use tonight. One is to do with the velocity of money, how you encourage economic growth, and that is to get money circulating. Now, I'll use an example from Orkney. This is maybe unfair. I want to walk down to the various shops. One of them is Boots. Who owns Boots? Does anyone know? Now, yes, it's creating employment. Yes, you'll buy stuff out of Boots. But where do the profits go? They don't stay in this country. If you think of all the tax dodgers that we've heard about, whether it's Amazon, whether it's Google, money goes out of the economy. You can stop that to some extent if you have a local currency, because that money stays within the locality that you're dealing with. Singapore has a population of 5 million, just slightly above Scotland's. That's their note, that's their currency. And on it, it says, this is legal tender. It's an entirely different approach because they started a lot later than Scotland. They broke away from Malaysia. They became an independent country. They have a central bank. They have to deal with some of the things I've put on that piece of paper. How do you deal with the external world in terms of exchange rate? Yes, we all go on holiday. And yes, we look at what we're spending and what the exchange rate would be. But in our day-to-day life, in the Skara Brae type of situation where you're in a locality, we're using these notes. I'm going to read you some of the other signatures on these notes, which I got out of the bank, truthfully, today. That's Stephen Hester. He's no longer at the bank. This is as close to monopoly money as you can get. Ross McEwen is the current CEO of the Royal Bank, and I'll come to him slightly later. Anyone remember who came before Mr. Goodwin? You'll recognise the name, I think, when I say it. Sir George Mathewson. That note came out of the Royal Bank of Scotland ATM. George Mathewson left the Royal Bank in 2006. Because that system is one we all accept and we don't question, is one of the reasons we had a bank crash. We saw everything going on. We saw credit being ballooned out into huge sums, lending to people who couldn't pay back, and we all became too poor. Everything I've touched with so far is too stupid, as far as I'm concerned. We had cuts in public spending, which are going to continue. We had cuts in welfare, cuts in disability benefits. We have the sanctions regime, and I, Daniel Blake, is an absolutely brilliant film, and it's going to affect a lot of the political discussion over the coming months. We got poverty because what Mark Carney represents in the Bank of England, and why Andy was correct in referring to what David Cameron said, is the Bank of England is a lender of last resort. So when Mr. Goodwin or Lord Stevenson at the Bank of Scotland go bananas, or Northern Rock start doing it wrong, they need bailed out and they go to the Bank of England, and he's the lender of last resort. During the first referendum in Scotland, Mark Carney said that Scotland needed reserves of about £133 billion to be a lender of last resort. And I'll come on to Ross McEwen in a minute. And the reason he said that is he's basically saying you need those reserves if your banks go bust. Why are we living in a world where we just sit down and say, let's let the banks go bust? We'll just bail them out the next time. We just accept that. We are the lenders of last resort. The people on sanctions are the lenders of last resort. It's not Mark Carney. I'm going to move on to welfare payments. Anyone heard of the name Vocalink? Okay. Vocalink are a company basically set up to handle the transmission of money in the UK. It's originally owned by the big banks. The Competition and Markets Authority, which is one of the areas I take an interest in, said, look, that's a bit like a cartel. You're handling an awful lot of money in the UK. We need to get you broken up. The bank said, okay, we'll agree. Vocalink at the moment is being bought over by MasterCard, one company. Now, we're round the campfire at Scapa Bray when I tell you this. Vocalink processes in this country over 90% of the salaries. More than 70% of the household bills. And almost all, I'm going to say all, state benefits. All of that goes through one system owned by Vocalink. Last year, they processed over 11 billion transactions with a value of £6 trillion. One company. So when the government say to people who are due a pension, here's your pension, they put it through Vocalink, and we all lend it to the banks, who are tied in with MasterCard, who own Vocalink. It's one big circle, and we don't think about it. In India at the moment, they're reissuing not all, but they're reissuing bundles of debit cards, because in one bank it suffered a malware attack, a bit of technology attack, and the money started leaving. If you watch what's happening in America with the election at the moment, there's companies getting closed down. Facebook won't work. A few other systems won't work because there's been an attack on the internet system. And one of the reasons I'm going to talk about paper money always is I worry that we end up with too many things that are internet related, because they're talking about stuff stopping the whole system out of the piece of device that's on the fridge that tells you that your salmon's out of date. There's a big worry coming with that. Now, how do we change it? I first met Leslie Riddoch at the time Make Poverty History was on the go. If you remember the big meeting in Glen Eagles, the G8 came. And that was a meeting that Leslie Riddoch arranged in Edinburgh called Sambasa. Sambasa is a Swahili word that stands for sharing for the common good. I followed that up and kept in touch with some of the amazing women that featured in that conference. One of whom set up starting from absolutely nothing, started a whole series of radio stations throughout Kenya. And keeping in touch with her, I found out what they were doing in Kenya, because we had Nairobi, which was a very big town in Kenya, but the further out you got, the further away you got. They didn't have banks. We're watching banks closing branches here. Kenya never had the bank branches in the first place. So if you happen to be a son moved into Nairobi, making money, and you want to send it back to your parents so that they can buy food or whatever, you basically got on a bus. And before you got off the bus, someone had banged you over the head and stolen the money. What happened in Kenya was it became the fastest growing mobile phone country in the world. We all rely on cables. We're talking about broadband, and we're talking about having fiber optics. Kenya didn't have any of that. It just started from scratch. So mobile mass went up. They started using mobile phones, the most basic phones. You can imagine back to the Nokia phones that we all used to use. Because that was set up, Vodafone, using technology, actually created somewhere in the south of England, started saying, can we not use this to start doing transactions in money? And that's what they did. Basically, 20 million people in Kenya now transmit and pay bills with no involvement of banks, just by using a mobile phone. Now, the country is poor. If there's a video, unfortunately I can't use it because it's copyrighted, but it was done by an American broadcasting company. And it showed you the transformation it's made in Kenya that this has happened, because parts of Kenya obviously are dramatically poor. I regret, and I shouldn't be saying this on camera, that I am still a smoker. You don't buy a packet of cigarettes in Kenya if you're poor. You buy one cigarette and you text the payment on your phone. You don't go down to Boots and buy a tube of toothpaste. You go into the shanty town and you get a squeeze of toothpaste and you pay for it on your mobile phone. They've got it right down at the level. When I started Act Local, that's what happened in Kenya. The banks fought it like mad. You would expect them to. But that system is working today. Now, you'll see it happen. Apple are looking at iPay. You've got contactless cards. There's developments going on. The difference, however, is if you look at Apple iPay, it still requires a credit company, a credit card company, or a bank. That's where the money is coming from. In Kenya, just like they did with using mobile phones without landlines, they jumped way ahead. They're using mobile phones. I said I'd get back to Ross McEwen. Ross McEwen spoke about the future of the Royal Bank of Scotland. Did you know it's in a turmoil that keeps getting hit with legal challenges? He eventually concluded in his speech that the Royal Bank of Scotland was too big for Scotland. And that's the same as Mark Carney speaking before the last independence referendum. The reason Ross McEwen saying it too big is the problems he has if it goes too big, if it goes bust, is too big for Scotland to handle. But it begs the question, why are we letting them go bust and why are we bailing them out? Most people blame the banks for the banking crisis and the cash crisis. Personally, I blame the regulators. There's thousands of people involved in regulation. If you think of all the people you ever heard about, right across the world, whichever bank, whether it's in Japan, whether it's in America, there's squads of people involved in looking at banking. That's why I passed that piece of paper around. That's the head of the banking at the Bank of England. She's not the only person there. There's thousands of people doing this. How on earth could they miss a bank crash? They've even drawn up equations to tell you when the next one's coming. Okay. Just bear with me a second. I'm going to show you a figure. I don't know whether you can read that. It says £772 billion. This is about maybe a month old. 772 billion. Just try and remember that. What that's paying for is the entire UK government expenditure. Social protection 240 billion, personal social services 30 billion, health 145 billion, debt interest 39 billion, defence, education, transport. 2016, 2017, that was the estimate, 772 billion pounds. I'm going to show you a second figure. £850 billion. Now, you don't have to be a mathematical genius to realise that's bigger than the first figure I read out to you. That is the cost of the bank bailout. The total cost of bailing out the banks and everything that went with it was greater than the total government expenditure for the whole country in every single department. It's mad. Where did that go? I'll read you some of the figures, not all of them. We got 76 billion to purchase the shares in RBS and Lloyds Banking Group. We have 200 billion to indemnify the Bank of England against the losses incurred in providing over 200 billion of liquidity support. That's the lender of last resort bit. The Bank of England puts the money in, the government then guarantees it. No, it doesn't. The taxpayer guarantees it. The person that's been sanctioned guarantees it. They also spent 32.9 million in Slaughter and May, big firm of solicitors for commercial legal advice, 8.7 million Ernst & Young due diligence on Northern Rock, 7.4 million BlackRock valuation advice. It goes on and on. But you won't find you and I on there anywhere. Not the people that are actually paying out for the lender of last resort. And that hasn't stopped. Just before the Royal Bank went bust, they asked its shareholders for a whole load of money. Just shortly before it went bust, and it told them a whole pack of lies. And the shareholders are suing the Royal Bank of Scotland for a whole sum of money. It's about £12 billion. So far, we, as the owners of the Royal Bank of Scotland, because we are 72% of it, have spent £100 million on legal fees. And we're also defending Mr. Goodwin, because he's part of the claim. This is the world we're living in. Okay. We're going to do a question and answer session, and I'm going to stop at this point. And I've asked Fiona, those are the stories that I think are relevant when we start looking at currency, when we start looking at the system in which currency exists. In a funny kind of way, I don't want to talk about currency. I don't want to talk about money. I just want to talk about common sense at a human level. Who should make the promises? If we are going to pay for it all, should we make the promises? Should we not be using banks? If Kenya doesn't use banks, why are we using banks? There are answers I could argue with myself about in the answers that I could give to those questions. But basically it's to try and get to a situation where the people in Scotland who want to look at what are the answers to currency have to start asking questions in a different way from a very basic level. Who do we trust? Who should we trust? How do we develop it? Is there a solution? I hope after the Q&A I'll show you the solution I came up with, and I hope it might interest you. Thank you.
Okay, I'm going to come out with the microphone because we're filming it. If you've got a question, speak into the microphone, and then the filming will catch it. So any questions at all? We've got Andy here and Mike here who would like to start it off. Anybody? Yeah.
What would the legalities of a company demanding that your wages get paid straight into the bank? What does that mean? Could you tell your company, no, I want this hard cash?
The reason I referred to the Brixton pound and what's happening down there, I'll jump for a second. The two local currencies that I know reasonably well are the Brixton pound. The bigger one is the Bristol pound, which is in use within a population of about 1 million. And both of them look at whether or not they should use a bank. And what they're doing is looking at credit unions rather than banks. But it does then beg the question about whether or not the credit union uses a bank. So you start having thoughts like that. Now, personally, if you look at what Commonweal did, not the Craig DL one, but an earlier one, they started looking, it's done with the New Economics Foundation, they started looking at local authorities having banks. Personally, I think between credit unions and local authorities, that may be the way we start going in that particular bit. And that's why I made the reference to the fact that traders in Brixton can pay their rent and rates in Brixton pounds and the salaries can be paid that way. Nothing I'm suggesting is other than trying to open up exactly what you're saying. Can we start looking at how we do this? But with a different perspective on why we shouldn't maybe be doing what we're doing it at the moment is not to reject. Banks will still exist. I'm not trying to overthrow banks. I just don't think that a pensioner who may be a widow, who's not got a full pension, should be lending money to a bank who's paying its chief executive £5 million. I just don't think that makes any rational sense. I mean, it fits into storytelling of tall tales.
Well, my response to your question is that it's not legal. In fact, much of what's going on and is currently going on is not legal. But if a currency doesn't work on whether it's legal or not, I mean, Mike made reference to several points about the legality. All the big banks in Britain today and the UK today are what are described as zombie banks by an economist in America, which I refer to in the book. And he refers to them as zombie banks because they're all out with the law. They're breaking the law, and we are breaking the law and keeping them in being. And that's why he calls them zombies. They're dead legally, but they're being fed by us operating illegally to support them. I mean the government on our behalf. So the simple answer to your question is, no, that would not be legal. And a lot of the systems that have been referred to might not be legal. But currencies are not operating on a legal basis currently. There's many aspects of the present currency system which is not legal, but it's being supported and allowed to continue by the government. And that's the weakness of the situation we're in. And that's why it's important that we get to grips with this issue.
Anybody else with a question?
Wouldn't there be a way then that we could actually develop our own, like, People's Bank, like a sort of municipal bank or something, but the people then are the partners and no people, you're only then answerable to each other. So as it was, instead of having like actual board members, we are the board. It's just absolutely the people that would be in control.
Well, there is a lot of new developments in money, and it's direct exchange, your Bitcoin and examples like that where it's direct exchange. And that is legal because it's out with the system. It hasn't been brought into any of the legal systems as yet. And it's a direct exchange, and it's fair enough, and it's operating. And it's developing, and there's a whole lot of new systems developing. But the importance, I think, for us in Scotland is to get a system which works, which is legal and is controlled by the government, right? Because that's something you could say to your children in the future. Our present system is illegal. It's not going to continue. It cannot continue the way it's operating because it's building more and more debt around a weaker and weaker base. So that system will collapse. It's just a matter of time. If you allow that to happen, what you're doing is you're putting problems for your children into the future on their heads, and that's not fair. So what we should do is sort the system out, and that's what we're arguing about, a full reserve system controlled by the government, which would belong to the people, and incidentally would cover the point that Mike made about, because Mike's absolutely right in saying currently, once you put the money in the bank, it's no longer your money, it's the bank's money. But if you had a full reserve government-controlled bank in Scotland, it would remain your money and in your account, right? That was one fundamental difference that it would make to the system. So, yes, we should have a legal system. We ought to have one. The present system is not fit for use, and we can get to that if we design it. And that's what we're trying to demonstrate should be done.
I'm actually going to jump, Fiona, with your permission, to answer your question very directly. I read this out, and I'm going to show you what I'm using to do it. Might seem strange. I want you to imagine that's a central bank. Between now, I wrote this in June. Between now and Hogmanay, I set out to find all those who would wish to see change and are willing to commit to that change by depositing a coin of legal tender into that bottle. And then, by signing a piece of paper with their name, their signature, the place where it was signed in front of witnesses, and the date. So that between that and what I'm going to suggest now, it's in their own hand, a promise can be honoured. Not a promise made by a bank. A promise made by people who sign that piece of paper and put £1 in there. That between now and Hogmanay, all such coins are placed into the hands of the First Minister of Scotland for safekeeping. Not Nicola Sturgeon, the First Minister, her successors. I've made 2 deliveries so far, and I've collected bundles of signatures from all the meetings I've had. That on the 1st of January 2017, this is going to be tricky, Scotland will see the creation of a new medium of exchange, because that's what these promises are. Walking into Lidl, here's my note, give me my food, give me any change. Based on those promises, not a promise from a bank, a promise from people living in Scotland, backed, as Andy accurately said, by a full reserve legal currency. No notes issued unless the money's in there. For use only in Scotland. I then had to come up with a name for it, and I said it carries a name which will be recognised and respected around the world as a medium of exchange that can be trusted. And I suggested it be called the Scottish Hand, because in Hogmanay we will all sing Auld Lang Syne, and we will all offer a hand, my trusty fear, and gies a hand of yours, gies a hand of thine. If I'd had a deal with Andy tonight about who was paying for the next pint of lager, I would shake his hand. When you do a deal, that's what happens. It's the most natural thing. When we went to dinner tonight, every one of us shook each other's hand. It's to do with friendship. It's to do with trust. It's to do with why you're not holding a weapon. The sword's not there. So far, so good as far as that's concerned. But let me just jump for a second. I said I got bulletins from the Bank of England. This is the Bank of England publication on banknotes, local currencies and central bank objectives. I've got to manipulate what I'm talking about through a maze of regulations from the Bank of England. I'll give you one example of it. How much do you think it costs to print all these pieces of paper? You know, you go into a printers and say, I want 3 million of these. Be pennies. But think when you put a 5 on it, say it was a penny, you just made £4.99 profit. You put a 10 on, you've just made £9.99 profit. That's the second technical term we're going to refer to. It's called seigniorage. The Bank of England make money from printing money. The reason the Isle of Man have their own currency and print their own money is they don't pay the Bank of England for printing notes. They keep the money. It's another feature a lot of people don't understand. But I've got to watch very carefully how I do this at Hogmanay when I'm talking about issuing a currency, because counterfeiters can produce these. And I've got to watch very carefully how I handle the issue of a note on the 1st of January, so it doesn't become a laughing stock, so that the mainstream media don't pick it up and say there's thousands of counterfeit notes going around. I'm not going to tell you how I'm going to try and do that just now, but the intention very simply, and it directly answers your question, that you have symbolically a central bank which is a full reserve currency. You then have notes which are a medium of exchange, which are backed by that currency and which can be used just the same. And you can have a choice. Now I would bet, I think Orkney is maybe a good place to think about this, because I think with the cruise ships coming in, different types of currency circulate here more than they do from where I come from. But you would have a choice. A promise made by a Scots person, fully backed as a reserve currency, or a note issued by a guy who no longer works for the bank. Hope that answers the question. I'm going to invite anyone who wants to. I've got these pieces of paper with me. If you would like to sign them, I'd be delighted to have your signature. It costs you £1 to back the promise. Thank you.
Hi, here we are. Another question.
I don't really understand the concept of leverage, but it's the sort of system you're advocating, outlawing leverage, really. So you're the banking system you're hoping to create is leverage outlawed.
Yes, if you have a full reserve. Leverage is a process whereby you have a currency where you only reserve a percentage, a fraction of the value of the currency that's circulating. That's what it means, a fractional reserve currency. It means that they have in reserve only a fraction of the amount of currency that's out there. A full reserve currency is one where you've got the full reserve for the amount that went in. So his pound in the jar, if you issue a pound in a promise, it's a full reserve, right? Because it equals. Leverage is where people are using the lever of the fraction to affect their use of the currency. So the leverage is only possible where you've got a fractional reserve currency. If you've got a full reserve currency, it doesn't apply. You're right in saying that in his case it doesn't apply.
I mean, I can see that leverage has got its problems, obviously, but does it not sometimes help to produce growth?
Well, that's a myth. Let's examine that. Is everybody clear about this argument? The argument is, if you've got a fractional reserve currency where you don't actually, what happens is, it started off with the goldsmith. People would go to the goldsmith, they would give him, let's say, 10 ounces of gold, and he would issue 10 ounces worth of paper notes, the promise on that gold, right? And if it was 10 ounces and 10 ounces in promises, the two were kept, it was a full reserve, the two were kept in balance. When you start issuing more promises than you've got gold, you've got a problem. If everybody comes for their gold at the same time, the system collapses. Now, what that argument about leverage allowing for further development means is that you've got in circulation more money, or you've put into circulation more promises than you've actually got. And so it's argued that goes for growth. What goes for growth even better than that, far better than that, is to have in circulation, because growth is really about you're producing things. And when you've got an economy like ours, where you've got young people who are not employed, if you get them into employment, you'll create more growth. And if you operate a system which brings about real growth in the economy, the money grows with it. If you've got a full reserve currency, the two are related. Money does not create wealth. That is a fallacy. It's not true. What creates wealth is economic factors. I said earlier the two are related. Economic factors is what creates wealth. Money only is a means of exchange. It doesn't create wealth. And the leverage argument is a false argument.
If you ever watch a film of an aircraft coming down in the desert and they struggle through looking for the water and eventually they see a mirage, that roughly is what fractional reserve banking is. It's got a feel-good factor. But if you dig into it a bit and you get closer to where you thought the water was in the mirage, it's not there. It's actually leaving you as thirsty as you were, or even thirstier than you started off thinking. If you take it to its logical conclusion, you would end up with every government issuing and every bank issuing as much money as seemed to be needed. The whole thing would just collapse because no one would be able to trust it. The debt would be so enormous. Where you get, to follow on what Andy was saying, where you get into a situation, up until when, Andy? 1950s, 1960s, 1970s. The money was produced from the government and given out to the banks. Then President Nixon, it's often said it's Clinton, but President Nixon decided to do away with what had been the agreement on a gold standard for money around the world. They just said, right, Bretton Woods is gone. We're now going to have free floating exchanges. A lot of what I'm talking about is very localised. I'm talking about only in Scotland. I'm not ignoring anything that Andy's saying. I'm not ignoring what the Bank of England lady is saying. There's bigger levels than that. Essentially, at the end of the day, we need people in Scotland to have enough confidence on the question of currency to vote yes and to speak to people who previously voted no and say, do you understand what's been happening, what we've been talking about, and why you shouldn't have any fear of it? What happened the last time round by saying we're going to have a currency union was the wrong answer. Totally the wrong answer. It meant you were reliant on someone you couldn't be reliant on. It meant you were under the control of someone that denied independence. We've got to find a different answer to that.